Welcome to Silver Heist. Thank you to our returning subscribers and guests. Are we in the beginning of a precious metals bull run? So whether you're a silver stacker or a gold stacker, I'm going to show you how the surging increased demand, in this case American Gold Eagles, is an early indicator that we are in the acceleration phase of a bull run in gold. So we'll focus on silver another day, but the numbers I'm going to share with you are all about the gold. So this is a 1/2 ounce American Gold Eagle, but they come in multiple sizes. Imagine just like silver coinage, there is the full size, the half, the quarter, and the 1/10. So this is a 1/10 ounce of gold. So this is a 1/10 ounce of gold. So what I want to show you is how the ounces of gold have increased dramatically as produced by the US Mint. And so not the total quantity of coins. So if you put all of the gold American Eagles, no matter what size, on a scale, how many ounces were sold in a given year? Let me show you a chart. This is from the US Mint. This is for American Gold Eagle annual ounces. So for the last 4 years, the blue, which is the gold ounces on the left, 017 was the biggest recent year at 300,000 ounces, and then it went down in 018 and 019. But 2020, just through April, in 4 months, we have sold more American Gold Eagle ounces minted in 2020 than all of 2019 or all of 2018. And in the table I have that built this blue bar graph, just in March 2020 alone, there were more Gold Eagle ounces sold in March than all of 2019 combined. So the trend is up. The red line indicates the average gold spot price on the right, and so 017 and 018 was just under $1,300 an ounce average, and then in 019 it went up to about $1,400. In 020 it's averaging about $1,600. So before 2020, I was looking at the blue bar graphs going down and thinking, well, as the spot price goes up, less people are interested in buying gold, they can't afford it. But at a certain point, it flips, and when gold price goes up, more buyers come out. So the higher gold goes up, the more demand there is. So there are more buyers at $1,600 than there were at $1,300 an ounce. Now, where could 2020 go? Now, the good news is the US Mint has reopened the West Point Mint in New York, and they are the only mint that makes gold bullion coins. So after less than a week shutdown, they are ready to produce gold bullion again. So they have the green light to produce as much gold bullion as they can ramp up production. And so there's a lot of room to grow. So let me show you another chart to show you what's the most the US Mint has produced. So this chart, we're only seeing 300,000 ounces a year, but they can easily produce over 1 million ounces a year. So the second chart I want to show you shows how once demand for American Gold Eagle increases dramatically from one year to the previous year, that is the early stages of the last growth of a bull market. So look at this chart here. In 2008, there were over 800,000 gold ounces produced, and that was a huge increase from the 200,000 in 2007. So September 2008 was the stock market meltdown, as is February, March 2020. So similar results. As the stock market melts down, the increased demand for gold skyrockets, and for physical gold skyrockets. So look at '08, what that unleashed. Because not only when the stock market melts down, it's the Fed's and the federal government's response to that stock market meltdown that creates policies that feeds people's desire for more gold, increased demand, increased high gold spot price. So in the second chart, I actually, instead of the average spot price for the year, I wanted to show you the high, because I wanted to show you when gold turned. So gold turned in 2011. So 2011, it peaked out around $1,900 an ounce. And by that time, it had peaked in demand in 2009. And then gold just kept getting more expensive. And then gold peaked in price in 2011. And the demand still stayed fairly high. And then eventually in 2013, you can see the dramatic drop from high 1700s to 1400, the steep red drop from 2013 to 2014. And then in 2014, the demand dropped. But then the demand picked up again in 2015 and 2016. So it was only after the election of Donald Trump that I think people just put all of their eggs into even more of their eggs in the stock market and lost interest in the precious metals. But that is changing, as we can see in 2020. So 2020, looking at the chart from 2000 to 2020, 2020 has the potential, if New York can produce the coins, I don't see why it couldn't hit 700, 800,000. To me, it looks like 2008. We're only 4 months in. We've had some interruptions at the mint. The demand is there. And I think the demand is going to stay solid as long as people have some continued income they can redirect towards savings. So as long as people are still saving, I think they're going to turn it into gold savings. So based on those blue charts and comparing 2020 to 2018, I'd say we're somewhere in here, and there is a lot of room to go up, but just be aware that it's not up and to the moon. There will be a correction down the road, significant correction. We'll cover this chart in another video down the road. So I'm not a financial advisor. I'm just sharing my experience and my insights. I believe we're still early. I'm looking to buy some gold from time to time still. And if it's something that you don't have any gold or you want to add a little bit more, I think there's still room to grow. If you'd like to see more of this gold kookaburra and its sister silver kookaburra, please click on our featured video.